What is going on, guys? Welcome back to another deal of the week breakdown. In this video, I wanted to walk you guys through one of my absolute favorite strategies, and that's negotiating deals up front that allow for my investors to save significantly more money when they close. The reason I love doing this is because one, who doesn't love saving more money? And two, who doesn't want to allocate that money that they saved towards the things that they can update on the property, whether that's things like furniture or design or amenities or even reinvesting into more future deals. So it's one of those strategies that I love implementing on literally any and every property that my clients purchase, whether they're purchasing a property to live in or whether they're purchasing a property for investment. It really doesn't matter. It's one of those things where if we're in a market where it allows for you to negotiate, why don't we take advantage of doing the negotiations? I think that the biggest thing is making sure that we do this upfront with your agent. A lot of the times I have so many conversations with agents who don't even know that these types of strategies are possible. I've had many situations where agents think that the cap of how much you're allowed to negotiate in seller credits is like, even more than, or I'm sorry, less than what they're actually trying to get or what the client has the ability to get. And sometimes that's, even double of what's actually allowed. So in this situation, I want to honestly let's just jump straight into this deal because honestly, it's one of my favorite kind of structures. But this was a client of mine who was purchasing a property specifically for a short-term rental. It's in a city called Pawleys Island in South Carolina. It was a single-family house sitting on a huge 1 acre lot. Definitely has a ton of potential for amenities. Living square footage was 1,400. It was a 3 bedroom, 2 bathroom house. Sat on the market for 60 days. My client had a 790 credit score, which actually allowed for them to get better pricing on interest rates. Interest rates have been, super influx in the last couple of weeks. Right now, they're just kind of floating where we've been in the last couple of weeks. It's not really like a huge difference. I mean, most investment properties are in like the 7 to 8% range, depending on what kind of strategy we're using. Also, depending on like down payment, maybe different kind of loan program. But because my team and I deal with majority real estate investors, I'm always seeing like where interest rates are at for investment properties. I get to see where other lenders are sitting for investment properties, and like I get to see what works, what doesn't work, where I can allocate some strategies from like maybe a different state and pull that into a deal that my client's doing in like South Carolina, right? I can take a deal that I did in Arizona and bring my strategy to South Carolina, and it works in these different markets. I get a really good bird's eye view on all of the things that are happening across the board. And so, like in this situation, I said, hey, let's negotiate that money up front. We have way more wiggle room. We can save you significant cash. So that's exactly what we ended up doing on this deal. So this client ended up purchasing this property for 499,000. It actually over appraised by 37,000. It came in at a whopping 536. So appraised value was 536K. This was a single family house. We ended up doing a investment loan. Um, and this was a non-conventional type of investment loan. It was a little bit different just for my client's ability to qualify, which is the reason why we ended up doing a 20% down payment. 20% down is not really common for investment properties. I know a lot of investors that I talk to, they think that 20% down is the absolute minimum. Some investors even think that it's 25% down, when that's really not the case. I have so many individuals who purchase properties with either 10 or even 15% down, purchasing a property to utilize as an investment with lower down payments. It's just about talking to the right people and understanding what strategies are available for you. So again, purchase price on this house was $499 and it had come in at 536. The down payment being 20% down for us had come in at 99,800. So that was our down payment, 800. Interest rate was at a 7.99. Again, because we use a non-conventional loan. And so non-conventional financing is where we use different strategies in order to qualify. Like a client may qualify for normal financing, let's say with their taxes, but they might not qualify for as much as they want to purchase. And so what ends up happening is, my team and I will pre-approve an investor of ours and say, hey, you're good to go at this down payment of 10% down, for example, up to a 200K price point. But if you want to go to a 400K price point, we could do that putting 15% down. And then if you want to go above 400K, we can do that doing 20% down. So I love showing people those options because it gives you a difference in what you have the ability to purchase. We're not just saying, hey, you're only approved at 200K. Sorry, we can't help you. No, it's actually coming up with a game plan. It's explaining the situation and how our clients have the ability to qualify for more. It's just that we might have to get creative and figure out where we're going to get the money for the deal. So that ends up being the situation in most cases. The principal and interest payment on this was at $29.26. Homeowners insurance came in at $505 with 36 cents. It was a little bit more expensive because the client was purchasing a short-term rental. We have property taxes at $496 with 14 cents. There was no PMI since our client put a 20% down payment on this deal, and so that doesn't apply. PMI, we've talked a lot about, is private mortgage insurance. Essentially, anytime somebody uses a loan program where they're putting less than a 20% down payment, it's going to require private mortgage insurance. Essentially, it's an insurance policy that the bank is going and getting in the event that you default and you stop making payments on your mortgage. Now, most instances, there's non-conventional loans that don't even have monthly PMI if you're putting less than 20% down, or if you are at 20% down or more, there is no PMI. So that was kind of the situation here because our client ended up putting that 20% down in order to purchase the property. Total monthly payment on this property came in at $39.27 with 91 cents, right under 4K a month. Now, jumping over to the total closing costs. Closing costs were pretty significant because of where my client was purchasing and also the time of the year of what my client was purchasing. So there's a lot of additional fees that weren't included for like the actual loan itself, which ended up making it $34,847 with 74 cents, which is pretty high. That's actually higher than the last like 15 deal of the week reviews that we've done for you guys. And that's, again, because of the location. Closing costs are always dependent on location, and closing costs are also dependent on what time of the year you're purchasing. It can sometimes increase what you're paying. Now, the client had also negotiated $30,000 in seller credits, which we used, of course, to cover this, the closing costs here. And so that ended up bringing that significantly down. There wasn't really any adjustments in other credits, which was what the client when we're doing adjustments and other credits, it's basically money that you're getting back from the seller because of the time of the year, again, that you're buying, right? There's property taxes that the seller pays for how long they've lived in the property, and then for the time frame that they're not there, they're giving that money back. It's a little confusing, but essentially the title company calculates this out for us. It's just based, again, on time of the year, and it's typically because of property taxes, like money back that you're getting. So in total, it actually had my clients out of pocket be very, 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 very close to just the down payment, which was $103,815. That essentially makes it so that we are down payment was at $99,800. So we're just $3,000 shy of being able to be just at the down payment. And essentially, had we not even had this conversation about negotiating this money up front, my client would have ended up spending an additional $30,000 that he was going to spend anyways, right? But we just got the seller to pay for it. And so now that allows him to go spend that money and take it towards another deal. He can take it towards amenities. He can do design. He can do furniture. So it's one of those strategies that I'm seeing things that work in other markets. I pull that and I tell my clients that are in, East Coast markets, what's working in the West Coast, or what's in the Northeast that's working that could work in the Southeast. So those are the kinds of things that we look at when I'm analyzing deals. My favorite thing about what I do is deal structuring. I love being able to explain to my clients what's actually possible with not only different kinds of loan programs, with different kinds of credits, with getting contractors to come in and we pay the contractors at closing. We can do repairs. There's so many ways that we can be super, super creative when it comes to real estate investing. And it's all about understanding the strategy of what you want to go after. If we know that you want to go after a specific kind of deal, I'm happy to explain to you guys the best way to set it up just based off of what my other clients are doing. And The cool part is that other people's successes are what works, so I can kind of copy and paste that with any of my other investors. So hopefully that was helpful. I mean, I know we kind of flew by that, but I always like just seeing deals like this because it shows what's possible. Yes, you have to have the money for the down payment. Yes, there's opportunities to put lower down payments, but in instances where, we want to scale a real estate portfolio, I always tell my clients we can find the deal and we can find the market where we want to go purchase the property. We can find the real estate agent or have one of my connections who's going to help us find that house to be able to make sure that's a good deal. We can find the bank who's going to give us the money for the loan. We can underwrite the deal and make sure that the deal makes sense. But what we can't do is we can't go and just get the money for the down payment. Like, that is the most difficult part of this entire process. And the faster that we can get the money for the deal, the faster that we can get into your next investment property. I hope you guys found this deal of the week informative. I'm going to continue to do a deal of the week for you guys every single week, showing you exactly what my clients are doing across the entire US. If you guys need anything at all with financing or you need any real estate contacts, feel free to reach out. My team and I would be more than happy to assist you guys. And if you haven't seen my other deal of the week videos, go and check those out here or here. Those will pop up on the screen for you guys. But I will see you guys in the next deal of the week. Peace out.